of the things that I think will eventually happen is the price of Bitcoin will become so large that just mentally people will have a hard time. Like, well, I can't afford $1 million or $2 million. Well, you don't have to buy a whole Bitcoin.
Hey guys, welcome back to Everyday Finance. In the video we have for you today, Mark Yusko shares his insights on the adoption curve of cryptocurrency and his confidence in achieving his forecast. 2.1 quadrillion is the total number of Satoshi in existence worldwide. There are 21 million Bitcoin, and each Bitcoin can be subdivided into 100 million. There are a whopping 2.1 quadrillion part Satoshis, which is an incredibly large number. Quite impressive. It's interesting to consider the value of individual units, and one thing that Mark Yusko believes will occur in the future is a potential change in price. Bitcoin's future growth is expected to be so significant that individuals may struggle to comprehend its magnitude. Well, if you're unable to afford $1 million or $2 million, there's no need to worry. You don't necessarily have to purchase an entire Bitcoin. You can simply buy a fraction of it. With just a fraction of a Satoshi, you can purchase 10 or even 20 Satoshis. In the future, Yusko believed that the Satoshi will become the standard unit of measurement. The book behind you will provide insights into the significance of the Bitcoin standard, highlighting the role of Bitcoin. An improved version of currency. What exactly is money? Money is a valuable resource that exists within the economy. There is only one liability missing in the entire world. Let's dive straight into the video without any delay to showcase the importance of building a network of trustworthy sources and staying informed about the latest tools and technologies. This will help us reach billions of people and highlight the significance of these practices, and lots of things Mark Yusko discusses, so please watch the video to end. And share this video, and subscribe our channel, Everyday Finance. Thanks.
So 2.1 quadrillion is the number of Satoshis that exist in the world. So there are 21 million Bitcoin. Each Bitcoin can be subdivided into 100 million parts, Satoshis. And so there are 2.1 quadrillion, it's a big number, lots of zeros, individual units. And, one of the things that I think will eventually happen is the price of Bitcoin will become so large that just mentally people will have a hard time. Like, well, I can't afford $1 million or $2 million. Well, you don't have to buy a whole Bitcoin. You can buy 1/100 millionth, a single Satoshi. You can buy 10 Satoshis, 20 Satoshis. And ultimately, I think the Satoshi will be the unit of measure when we get to, I see the book behind you, when we get to the Bitcoin standard, meaning that Bitcoin is a better form of money. What is money? Money is an asset that exists in the absence of a liability. There's only one in the whole world, that's gold. Everything else sits on top of gold in the monetary system, which is currency. Currency is what we use as a medium of exchange. Belief, custom, and nation states issue it backed by debt, but gold doesn't have debt associated with it. And gold is ultimately being displaced by Bitcoin, this better technology, this better form of money. Well, what makes it better? Well, it's equally scarce, meaning the amount that exists relative to the new flow. If you think about gold, the reason it's been so great for so long, a single ounce of gold is still a single ounce of gold. It doesn't change. It's an inert metal. And what's more important is the value of that gold has held its value for about 5,000 years. You can go back to Cleopatra's time, exchange your ounce of gold, you get a fine person's suit. You go to the medieval days, you get a suit of armor. You go in the 1920s, you get a zoot suit. You go to Savile Row today, you get a fine person's suit. And so, but why isn't gold then going to go on forever? Well, gold suffers from two defects. One, let's say I had a bar of gold under my desk, which I don't. Like if I was Kyle Bass, I actually would, but I don't. If I had a bar of gold, And look, I think I'm a reasonably fit guy, but I could not break that bar of gold. But let's say I could. Let's say I could divide that gold in half. It'd be really hard to get it precisely in half. I couldn't stuff it in the computer and send it to you, Kelly. So here's the thing. All the Bitcoin in the world fits right here. Now I don't have any on my phone. Don't SIM swap me. I don't keep it on my phone. I keep it in cold storage, so you can't steal it. But if I had any amount on the phone, with a couple clicks, I could send it to you. Now that's interesting because I don't need a bank account. You don't need a bank account. We don't have to pay fees for a wire transfer. So Bitcoin is more portable, more divisible, and importantly, the scarcity, the amount of stock relative to the flow. So in gold, the amount of new gold that's produced every year roughly equals the amount that's used up in industrial uses or lost or stolen.
Bitcoin is expected to occur later this month, but this time, the cryptocurrency's fourth event is expected to be different due to a combination of factors. The halving process occurs when the rate at which bitcoins are generated by the network is reduced by half, usually happening after 210,000 bitcoins have been mined, or approximately every 4 years. There is speculation that the halving event may occur earlier this year, possibly before the 20th of April, based on past occurrences. Bitcoin recently achieved a new all-time high just before the current cycle's halving event, marking a significant milestone. Experts at Coinbase caution that the market might be overly fixated on price fluctuations during the halving event, without considering the larger market conditions. Bitcoin has reached record highs in the months following the decrease in the rate of cryptocurrency issuance. The performance of Bitcoin during earlier events was heavily influenced by the context, which could explain the significant changes in price patterns during successive cycles. For example, in a study published in March, it was observed that a 45% increase before the second event in July 2016 was linked to the uncertainties surrounding Brexit. Similarly, the 73% gain before the third event in May 2020 was attributed to the effects of the pandemic. Thriving hub for the initial sale of coins. As per Coinbase, the introduction of exchange-traded funds representing Bitcoin has caused a notable change in the dynamics of the Bitcoin market. These funds were not available prior to the current time period. The products that began trading in January have seen significant inflows, resulting in a surge in demand and subsequently driving up the price of Bitcoin. If a Bitcoin exchange-traded fund, ETF, gets approved in the United States, it has the potential to greatly impact the supply and demand dynamics of Bitcoin. This is due to the significant increase in flows, which would be approximately 57 times the daily new units of generated BTC. Based on the data, a report with 21 shares would be generated. I'm curious about how this would unfold in a hypothetical scenario where the supply only consisted of newly minted Bitcoin coins and existing Bitcoin couldn't be traded. According to Coinbase, if we assume that the rate of new inflows into the United States remains unchanged, exchange-traded funds, ETFs, have experienced a decline in growth. Let's back to Mark Yusko interview.
So the stock to flow ratio is very high. That makes an asset scarce. Think about collectible Porsches, right? There aren't very many old Porsches. Why? They call it the dentist wrap phenomenon, which is not very kind, but true. Yeah. Dentist buys Porsche. No one tells said dentist that you can't accelerate and turn the wheel at the same time. The wheel has to be straight if you're going to accelerate. Otherwise, you wrap around the tree, hence the dentist wrap phenomenon, end of Porsche. So all the Porsches get destroyed. A few become scarce. The stock relative to the flow, very high. Same thing with Bitcoin. The amount of new Bitcoin that's produced is decreasing. The amount that's lost or stolen is relatively consistent. So the stock relative to the flow, as of this halving in 3 weeks, will actually be higher than gold. So it'll be more scarce than gold, more divisible, more portable. So it will displace, I believe, over the next 5,000 years, physical gold. It will become the base layer of money. Think about it. I don't know about you, but I don't carry money. I don't have cash ever. I use a little plastic card. And once a month, I settle up using ACH and L3 down to the L2 Fed wire, down to the base layer gold. Now, I don't go to the central bank, but the bank does. Bank of America uses Visa, and I get to, buy and sell things using not money, which is gold, but this transaction system. Now, the problem with it today, the Visa network sits on COBOL code.
What is that?
Not very secure.
Or something? Yeah.
Yeah. I mean, it's 70-year-old technology, 50-year-old technology, horrible, but it'd be too expensive to change it. Now we have this better technology, Bitcoin, blockchain. Bitcoin is just a blockchain. It is an application of blockchain technology. And blockchains are the new form of compute. So in the old days, we had mainframes that ran on COBOL and Fortran. Then we went to personal computers that run on DOS and Windows. Then we went to supercomputers in our hand that ran on iOS and Android. Now we will have blockchains, which run on these decentralized networks that become global compute. And the application of money into that global compute is the first great use case.
The availability of Bitcoin for trading has been declining since early 2020, which is a significant change from previous cycles. This decrease in supply can be attributed to lost wallets and forgotten keys. However, analysts at Coinbase also note that the level of available Bitcoin has been decreasing over the past 4 years, which is different from previous cycles. This may not necessarily be a negative development for Bitcoin, as it could indicate that investors are holding on to their positions for the long term and are less likely to sell based on short-term price fluctuations. With over $19 million Bitcoin in circulation and a supply cap of $21 million, the upcoming mining difficulty adjustment and halving will make mining more challenging and reduce incentives for miners. Typically, miners sell Bitcoin before halvings to cover operational costs. Considering the upcoming HING event, it's crucial to take into account the contrasting factors of the predictable decline in the rate of issuance of Bitcoin and the uncertainties surrounding the possibility of the Federal Reserve of the United States cutting its benchmark interest rate. Given the recent release of positive economic data, there is now a heated debate surrounding interest rates. The general belief is that if the Federal Reserve lowers interest rates, it would lead to decreased returns on US Treasury securities. Consequently, investors may find riskier assets like cryptocurrencies more attractive. If cuts are implemented too soon, there is a risk of reviving inflation. On the other hand, keeping interest rates high for an extended period could potentially push the economy towards a recession. Similar to a financial analyst, it is worth noting that central banks worldwide have already started making changes to their monetary policy approach. The fact that major central banks are prepared to lower interest rates despite the presence of a strong economic growth has likely played a role in boosting inflation expectations in the market. During a study, the digital asset management according to Grayscale, there is a chance of inflation rising. It appears that this may be leading to a rise in the demand for alternative means of storing value, like physical gold. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video.